Hello, I'm Patty Milne, your host of Marion County, your community partner. We have a really exciting program today where we're going to talk about economic development. I will be visiting with two local businessmen. One, Jim Rasmussen, who is the owner of Modern Building Systems Incorporated, a business that's been located out in Almsville on Porter Road for many years, family business, and also with A.J. Nash, whose position at Fidelity National Title is as an expansion officer. A.J. has had other background in the business community. Both gentlemen are very involved in our local community, doing a lot of volunteer work, including volunteering to serve on the Marion County Economic Development Advisory Board. Also, both men have been involved in our local SEDCOR organization. The discussion is going to cover everything from how did you survive the recent economic recession? What does it take to maintain business, grow a business through these slowly improving economic times? What is the difference between being a self-employed, a business owner, and the difference in being an employee? Again, where Mr. Rasmussen owns his business and A.J. Nash is an employee. So two very different perspectives. Another interesting perspective will be these two gentlemen. There's a little bit of difference between their ages. Mr. Rasmussen has been in business for many years, a little bit older, certainly not an old person. A.J. Nash, a younger, one of our up-and-coming young people who we really need this perspective as we're going to grow our community and bring economic stability. The ideas that young people bring to the table and the work they do, the companies they're employed with, makes a big difference in what we can do here in our local area in Marion County to grow businesses and help our businesses be successful. So please join me. Again, we are meeting out at Modern Building Systems Incorporated, where we will have our discussion, and then there will be a tour. You'll be able to see some of the production floor there at Modern Building. So I hope you enjoy today's program. Today's program, Marion County, your community partner, is going to be a discussion on economic development, what's happening in Marion County and our region. And I have two guests here, Jim Rasmussen, Modern Building Systems, yes, and A.J. Nash, who is with Fidelity National Title. So before we get into discussion, both of you give a little self-introduction about your business, your job, and for the viewers, and then we'll start talking about economic development and the challenges. So you
Sure.
want to start?
Of course. Good morning. I'm Jim Rasmussen, CEO, Modern Building Systems. We're a third-generation family business. Moved to Marion County in 1992. We have offices in South Seattle, Sacramento, and Atlanta, Georgia. We employ about 130 to 150 people. We manufacture, design, engineer, sell, deliver, and set up buildings that are built in a factory setting. Currently, we're building a 3-story structure for assisted living. We're building some coffee buildings. We do a lot of schools. Anything except residential. And my background, I've been with the company since 1988. Our company got started in 71. I'm partners with my brother, Ken Rasmussen. There's my nephew, Alan works for our company as project manager and salesman. I've been president of the company since 1996, and I've served as past chair of SEDCOR. I'm currently chair-elect of Travel Salem, and I serve on a number of other different boards and commissions, as well as the Marion County Economic Development Advisory Board, and work with a great guy named Don Russo. So thank you.
Thank you for showing me what I need to do, Jim. AJ Nash, Fidelity National Title. I work here in Salem in a two-county area, Marion and Polk counties. Also a JV girls soccer coach at McNary High School and a new father. So we've got the business owner and myself, the guy who still signs the back of the paycheck, not the front of the paycheck. Two perspectives in the room today, and I'd like to think that I'm pretty involved with small business in the local Chamber of Commerce's and young professional groups, but still aspire to mentors like Jim Rasmussen.
Well, great. You can hang on to that. Let's kind of go back to 2008. We had this horrible recession, and it affected everyone, whether you're a business owner or an employee or trying to raise a family. So, but we've survived that, we hope. We're moving forward. Talk a little bit from your own perspectives, your own experience of how that affected you, what you did to survive that time, and what do you see for the future? So there are a lot of questions there, about 3 of them actually. But go ahead and let's just start that conversation.
Well, Modern Building Systems was very fortunate. Back in 2008, we had a considerable amount of contract backlog. And so that carried us through really into 2009 and 10. We did not actually really feel the downturn until 2011. But then 11 and 12 were very, very challenging years for our company. But there's a number of reasons for that. We're not only a contractor and manufacturer of buildings, we are also a lessor of buildings. So I have a rental fleet of offices and schools and whatnot that kind of really carried us through and softened the blow. So we were very fortunate. We did experience challenges with subcontractors that were struggling, that would disappear when we were relying on them to provide supplies and services. That just was, I guess we were kind of lucky. It just wasn't as big of a challenge as maybe it was for others. What I find today, though, is extremely challenging because of the amount of construction work that's available today, and the reduced costs, and the margins, and it's just a very highly competitive market. And so you have to be as lean of an operation as possible, yet your client base still expects that high level of service at the same time.
So Jim, you mentioned earlier you have locations in other states. Do you think that that diversity of locations and different markets helped you survive?
Having a multi-geographical base absolutely helps. For instance, as time would go on, we would see busyness in California. Now today in California, it's incredibly slow, and that particular branch location is struggling. But our person that is managing our Atlanta office, she's doing very, very well. Oregon right now for us is doing fairly well because of just some of the projects that we're working on. And then the Seattle Puget Sound area has consistently pretty much outperformed the entire state of Oregon, frankly. So that without a doubt helps us develop that ability to stay busy when others are not so fortunate. And we're busy right now, really busy.
In your experience, what you've just described of where the ups and downs or the stability is pretty much tracks with what we typically know. We often are hit last in Oregon when there are changes in the economy or the marketplace, and that's what appears to be largely what your experience has been. So I'm wondering then for AJ, is because your company too is not only located in Salem. So do you did Fidelity National have a similar experience?
Well, at the point in time when this was all transpiring, I was actually with a CPA firm, so I had the privilege of seeing not only what the real estate industry, the impact it had on the real estate industry, but on all industries. And that is when I jumped into the workforce in 2006 after getting my MBA from Willamette University. And I can say that working for a CPA firm at the point of the downturn was a very interesting perspective and helped me understand why both county as well as local governments play a big role in what happens, in state governments. And at that point, Measure 66 and 67 came to be, and I got to see the type and size of a business that chose to relocate to Vancouver, that chose to go across state lines because of structure and because of the political landscape and the parameters and barriers that are set forth.
So the Oregon tax system pushed some of your clients over the river.
Absolutely.
So to speak, or over, hopefully not over the cliff. Pardon?
Everyone's clients.
Yes, yeah.
So from an employee perspective, I don't know anything from the good times. I've been an employee only in the downturn.
Well, you know what they say, if you can survive in the difficult times, you're going to just cruise in the good times.
Absolutely.
So you're getting
well,
a good
that would be
base.
the hope, and we'll hope, yes. I can agree. But specifically for the real estate industry, I can tell you that our organization, the one that I work for, Fidelity National Title, seems to be a benchmark. They're the nation's leader, and they have locations in just about every county nationwide, well, a large portion of them, and they service all. And what we saw with our Northwest region was an employee base of about 4,000 employees at the beginning of that downturn go to just about 1,900 employees, so almost cut in half very quickly. And there's a reason why they're a Fortune 500 company, because they make tough decisions and they make them quick. But we also saw, coming out of that, our employee base in that region get back to about 3,900 employees recently. But in light of recent rate and other market conditions, the real estate industry is a little bit in flux. Purchases
Cautious?
are coming back. They're cautious, absolutely. On the commercial side, very cautious. A healthier business, a stronger, more confident business, but still a very cautious business owner on the whole. And on the residential side, I'd like to think that consumer confidence is back up. The desire for home ownership is back up. There's some pent-up demand, and there's some optimism on resale and new construction markets, but the rising rates have definitely had an impact these last few months on our volume.
What's happening with prices, both commercially and residential?
So residentially, they're on the rise. Residentially, we have all signs of an improving marketplace. On the commercial side, prices are still well below market. Right now, it is very much a buyer and an investor marketplace, especially right here in our county. Massive concessions are still needing to be made. Right now, there is no significant uptick in commercial inventory that's being sold. Right now, the unit count, nothing significant, but the quality and the value of those properties that are a part of transactions have significantly improved. And the type of people that are coming in and creating new leases and stepping into our marketplace are a good medical clientele and larger companies. And so there's some optimism, but it's a very cautious optimism on that front, and there's still a lot of work to be done before it's effectively really stabilized from a pricing standpoint. We are still well below market.
Two things I want to back up to. One, you mentioned medical. It's a growing field. What are you seeing? What's pushing medical, the need for medical facilities, office spaces, clinics? What are you seeing kind of behind the scenes?
First, and nothing about age because of who's sitting at this table, but there's an obvious growing population of older people. The baby boom generation is moving in to that age group where there is more needs. There's frequenter visits. There's right now there is a need for healthcare that is obviously on the rise. When it comes to the delivery of the healthcare system, that's a national debate that right now is creating some concern and some issue. And I can tell you that, quite honestly, it's keeping a lot of people, not just medical industry, on the sidelines when it comes to real estate and investment. Right now, specifically, I can think of 8 to 10 deals that are of significant proportion that would bring great jobs to the area, but that are unwilling to budge until what we have is sorted out at the national level. And additionally, businesses that are well outside of the medical end of things, as far as a business, are still looming and concerned, and a lot of their caution is, well, I don't know what medical costs are going to be for all my employees, so how can I invest in a big asset for my company or move my company when there's this looming cost that is undefined? So on that front, a little bit of optimism. I'll say there's been 2 recent 14,000 square foot facilities built. As far as new development is concerned, rents are below market rate, and because of the current inventory, there is no new development except right now a couple large-scale medical, and it's been the first spec piece that we've seen. There's been one of those that's spec.
Are these medical facilities, are they small owners, individual physicians? Are they large corporate, more the hospital type? Who's looking at expanding and growing?
Across the board, every single level is looking right now, but there's just too many undefined variables, especially for some of the bigs, to really move. So when I look at new development, one of those is I would call a local provider. The other one is truly a spec development. Good. So it's 14,000 feet of medical space that does not currently have a user identified. But that's some optimism for the marketplace. There's at least a market segment, even amidst the current pricing issue, that feels strong enough to make something like that happen.
Good. The other thing I wanted you to back up just briefly on is talking about the concessions that property owners really are forced in most cases to make, or they find it advantageous to offer various incentives or compensation. What would some of that include, and where does that generally go, or to what percentage of an overall cost for someone needing to find some space?
Well, it makes it a buyer and a leaser market. So the burden is placed on the current ownership of the building, and the decision is, although I believe that my property is worth this dollar on the dollar, will I take 80 cents on the dollar to still be getting 80 cents a month in, or do I risk losing it all? Yeah. And that's really what's at stake, and what we've seen is a very significant rise in seller contracts, because there's still a pretty big credit issue. Yes, rates are low, but on the credit side of things, it's still extremely hard for businesses to qualify for loans. So there's seller contracts that are taking place by ownership that is motivated for some reason or another to get out, but can't find a buyer that is can get the credit. And then additionally, there is just so much inventory available that you need to, if there's somewhere across the street that provides the same thing, and it's at this market rent, and it's driven low because they're motivated, they need someone in there. And you're the property owner that has a current person in there that this lease is up. You've got to choose, how much are they worth? What is the relationship worth? And that's why concessions are happening, and quite honestly, they're across the board. Concessions in, the largest, the state of Oregon, probably one of the largest, if not the largest, leaser in Marion County of properties, has come down very hard. And terms have really changed, not just pricing, but we're only going to commit to a smaller term, which heavily decreases the property value on the appraisal side of things. And so that's, I can't pinpoint a specific area because it's across the board. It doesn't provide stability
in the marketplace, the current.
Absolutely. I mean, multifamily is the one that still maybe is the strongest of all, but retail, office, industrial, we are lagging significantly in industrial relative to the state, and then retail and commercial, although they have their wins, or office, I should say, they're still well below market value, and it's still a buyer and an investor marketplace here.
Good. So, Jim, going back to you, your business is manufacturing. So, what with some of the topics here that AJ touched on, the investment and the marketplace, in the manufacturing industry, what are you seeing?
Well, one thing for sure is Modern has been building more medical facilities in the last few years. That's what the 3-story building is in my factory at the moment, is a memory care assisted living facility. One medical company that I'm aware of that is growing at a fairly rapid pace right now through all of this has been Kaiser Permanente. They seem to be doing a great job in growing their business and their market share. They just built a huge hospital out in Hillsborough, a couple $100 million. And we just happened to have our open enrollment meeting yesterday.
Here at your own business?
Yeah, at our own business. And Kaiser is the primary choice for our employees, and Modern is still paying 100% of our health care for our people. That's tough to do in the construction industry, believe me. But we still remain committed, though this coming year we'll be forming a health committee of 5 of our people, and they're going to be facing some pretty tough choices, I suspect, coming for next year's renewal. It's going to be interesting as you shop healthcare plans these days, and as everyone realizes, those are huge decisions to make. And so this coming year, we're going to have about a 5-person team try to tackle that issue. It was interesting enough at yesterday's renewal. Fortunately, Modern's been very fortunate, lucky. Maybe we have healthy people. I don't know. They don't share losses.
Good safety record too.
Well, that's the work comp side. And
but it adds too, because then you don't have, if your people are healthier, there's less instance of accidents or losses or absenteeism, and they
Modern's
tend to
been very fortunate on the work comp side.
Good.
We have a great safety record, and our Experience Mod, if you're familiar with what that is excellent. And as of right now, our work comp system in Oregon is working pretty well. And if it's not broke, don't fix it.
Leave it alone.
Leave it alone. But healthcare in general for personal needs are something quite different. But it's very challenging.
Are you seeing an increase, a big increase, or is your cost to Modern Building stable, or what?
Went up about 8% this last year. But when you multiply that out by your employee base,
that's a lot.
It's tens of thousands of dollars. And that's expensive. It's tough on small business.
Yeah.
But it's also so very important that people have health insurance and can manage their costs, and that we have a healthy, vibrant society that we live in.
So going to your 5-member committee, is it the new healthcare laws that are urging you to put it in the hands of the employees to be more involved in the decision making?
To help make the tough decisions that
so
are
they
going
can
to be.
understand exactly
And
what
they'll
it
understand,
costs.
and they'll disseminate information to the balance of the people that are out there. I'm a very team approach, democratic kind of a guy, that I think that works best especially in troubled water times like the healthcare businesses at the moment. I think it'll all get sorted out in the next 2 or 3 years, but there's just a lot of uncertainty that's going to be happening in the next few years, and that's why you're seeing so much turmoil. But in the face of that, we're doing a number of major projects in that arena. So I can't explain that, but I think a lot of it has to do with where the funding's coming from, and people are still doing projects.
Good. Good. So while we're talking about healthcare and the cost to employers, what's happening at your company, AJ? What does Fidelity National and being a national company? Can you share anything about what you folks are challenged with? Or?
I think it's just a few weeks too early. I've not got my letter yet that says either my plan has not been, it's going to change significantly or not. I would imagine that, it's going to land any day soon for me, but I don't work on the HR side of things. I work directly in the major account sales side of things, and so I'm waiting, eager. I've got a 3.5-month-old kid and a wife that's on my plan as well, so it'll be a significant part of my budget, and I pay for health care. out of my paycheck, which means that it'll affect cash flow. So I'm interested to see where it comes, and quite frankly, a little concerned with what I hear as far as companies of similar sizes and then people in similar positions as far as it going
So interesting now, here we have a private company, more local, although with facilities in other states, but you provide, if I heard you correctly, the total health care costs.
Correct.
And it sounds like Fidelity National, there's an employee participation in it. So this is great, because this is a lot of the conversation, and where some people or your employers are, but how long will it last that you can pick up 100%?
No idea how long we'll be able to keep it going, because every year you get hit with increases, and then we weigh increase with benefit level. The advantage that Fidelity would have, or a large employer-based company, is the vast majority of them are self-insured, and they hire a third-party administrator to administer their healthcare costs, and then they buy reinsurance for major catastrophic claims. Not to be too technical.
No, it's good, but also the mere numbers of employees, but whoever it is at the headquarters is balancing all of this, and but again, where there's an employee responsibility, it's different. So this is good that we have these two different approaches.
Well, I should explain, though, that I pay for the employee, but I do not pay for the employee's dependents.
That's helpful.
They would need to pick up their spouse or their kids, and we do negotiate those rates for them, and we find that we're very competitive out in the marketplace. But we are still paying for the employee. We pay for the employee's dental, their life insurance. We pay for their short-term disability plan, as well as vacation, or we call it PTO, whatever that means. So,
okay, great. So I'm sorry, kind of interrupted you, AJ, on what. So again, to highlight some of the differences that are out there in the marketplace between companies. Anything else you can add on your company's benefit package and some of these differences?
When it comes to the health side, I probably should be more informed, but I'm still just a young guy, just starting and just learning those things when it comes to family and insurance right now. So I've had my family on my plan just since June when my baby was born. So I'm still in the discovery stage of what that means. But I agree on one area, and that's that healthcare is important, but someone needs to foot the bill. And I'm okay paying for my healthcare. I understand that. My only concern is if I'm footing the bill for others, how many people can I put on my back specifically?
Yeah. Right. So that's one issue that's not only local and specific to your companies, but also a national issue. Another area I wanted to cover is regulation, government regulation, and how it affects, and this will be good because manufacturing and real estate kind of financial relationships there. So whoever would like to go for it, talk a little bit about that.
I can tell you regulation they're the biggest barriers that we are faced with right now in real estate, and there's been a big loss, I should say, with a development that would absolutely transform and revitalize the city of Salem and the heart of downtown, which is Marion County too, and it is regulation based, it is policy based, and it all comes down to the business owner and the property purchaser, whatever it is, investor, just is trying to count on a certain set of variables. If you tell me where the finish line is, I'll work to save the money and do what it takes to get to the finish line. But the current Boise project's an example of a finish line that keeps changing right when you get right next to it. That carrot that as soon as you're ready to grab it moves further away. But I'm confident in that group bringing together a new plan, and I'm excited to see what they do. And I do believe as a whole, our city of Salem is working to improve their ability to maybe decrease some of these barriers. They've done the work on the front side to create and put the right people on committees to reassess, and I think that they're motivated right now to become more friendly on that front. Additionally, when it comes to regulation, the financial industry, great rates, that's all you hear. Rates are amazing, but at what stage do you qualify for great rates?
Right. Right.
A stat I heard yesterday from a national association of home building, was that the national average for a credit score was in that 680 range, hovers between 660 and 680. That the national average of those who qualify to buy a home was 30 points higher than that of our national average. But since increased regulation in 2009, the national average hasn't changed much. It's been steady on credit, which is interesting to see that it's improved and it's gotten back. But the national average right now of the credit of those who qualify to get credit for properties is now 69 points higher, almost 70 points higher, which means that, that's an example of regulation. We went from a 33-point difference to almost a 70-point difference just because of the extra layer of regulation that was put on. So from the credit side of things, seller contracts are through the roof. That is an opportunity right now in our marketplace for those who understand it to walk someone through a seller contract. But the only reason it's there is because regulation is hampering on the credit side of things.
So if you're going to have a buyer and seller come together, you better have an owner willing to carry the package at least for a while.
Carry the debt load.
Yeah.
And from the real estate side of things, it's awesome that there's a solution.
Yeah.
From the credit line, the ability to buy new equipment, the ability to expand in an area where you know that you can and that there's opportunity, that's the concern that who can carry that debt load. When there's a property owner, the private market can.
Right.
But I know that credit regulation is still a massive issue that needs to be dealt with.
Well, you mentioned equipment, and that's an issue for you as well, Jim. On the flip side of this, so is equipment more difficult to finance than a building or just, like an expansion of a location or a new facility? Is the equipment more difficult to loan on?
I could let you answer this, but in the end, no. I mean, there's an asset, there's ratios, and those ratios have changed. And then what a healthy company looks like has changed in the current environment. So although
talk about that a little bit. What do you mean by that?
Companies are running leaner in a lot of cases. That's what happens in tough times. And so they've been well capitalized, but a part of their asset base has been their property. But now the way that appraisals are done and the way that property values have gone south, their biggest asset that they hold, even though they've been current for however many years on whatever that property is, it's not adding to that asset base on the bottom line. It's actually in a lot of cases taking away from it. So it's a time gap in there for things to get back to healthy, but it's also it's one of those finish line things that have moved further out. What do you need to look like to be an A borrower at a bank, whether it is equipment or real estate? What you needed to look like in 2005 to be considered an A, and what you need to look like today to be considered an A is different. It's a lot higher standard. So, and I'll let you touch on this.
Yes, that would be great.
Well, considering I'm a financing company, because I have a fleet of buildings that I lease, and I even do some finance sales, that we do pretty thorough credit checks on companies, but I would say equipment financing has not gotten any more difficult. The percentages have changed, so that the lessee has to have more skin in the game, so to speak. But I think that's a good idea to have more skin in the game anyway, because it's their equipment, they're using it, and there's more non-traditional ways to finance equipment these days, from non-banking entities, I would call them. A number of places you can go, and then banks have equipment leasing arms where you lease a forklift, let's say, or a fire truck, and they utilize a number of different ways and instruments to make the deal happen. But if you're a business that's been around for a few years and you have a track record of paying your bills, you can get financing one way or another. But it is all reflected in down payments or cap costs and your percentage rates. But the availability is there. That's not really the problem. Talking about government regulations as it relates to real estate, I would say land use is a much bigger problem than financing these days. Time is money. Companies want to move quickly. They can't sit in planning for 3, 6, 9, 12 months, years in some cases. Big business just doesn't operate that way. And they're not used to having everyone in the community having a say about a particular piece of property. They just want to open their store, whatever that is. It may be making widgets or making soup. But they've got to be able to move and move quickly. And in Oregon, what we see is land use takes longer than, in general, than most other places.
And you really can speak to that with your your locations in other states.
Yes.
And
it's frustrating.
So you have a good perspective
on that. The process is just really, really tough. Even out in rural Marion County, where Modern is developing on our 35 acres for various people. And it can be quite the challenge, and it's too bad that a small business has to hire a land use attorney just to get a small project done anymore. It's great for the attorneys, not necessarily great for the price of the end product. And so that's where I would say the problem with regulation in real estate. As it relates to my company, we're about as heavily regulated as the real estate industry and construction. The amount of plan review and inspections and the inspections that go on inside of a factory environment are amazing, amazingly thorough. And
do you feel like you're constantly under someone's magnifying glass or do you get surprise visits, or how often is there an inspection of your facility?
There are random inspections that are somewhat surprising. A year ago, we had an inspector here for about 5 days to inspect our trucking division. Now, mind you, I've got 5 big trucks and about 10 very complicated trailers and lowboys that haul our buildings. And he was as thorough as to not only review our drivers' logbooks, but compare the logbook back to their timesheets and inspect hour by hour by hour. And, of course, inspect the equipment. After a week, he found out of, I don't know how many hundreds of tires, but one low-pressure tire on a trailer where that trailer has, I don't know, something like 16 wheels on it. And you kind of wonder about the cost benefit of those inspections, but that guy's got his job to do, and is a federal inspector, and they just go about doing their job. So it seems like we always have something going on. It's quite incredible. But as far as the building codes and buildings inspection side, because I'm building in Marion County and shipping all over the West Coast, predominantly Oregon Building Codes or a certified third-party inspection agency comes into our facility, and we have a great working relationship with Oregon Building Codes.
Good.
The state people over in Salem do their jobs well, and they're thorough. Sometimes we feel like we're inspected to a higher standard than maybe a local jurisdiction if you were out in some smaller town or city that had their own inspection agency. But that's okay too. The way we approach a lot of that is better sheathing, one more nail, one more screw, one more brace or bracket or truss is very inexpensive insurance if you want your company to be around 40 years from now, like our company's been for the last 42 years. And so we really don't mind. Maybe the line managers out in our production facility probably mind, but they provide a great service. They're not really a barrier. The barrier is getting the local permit to site a building somewhere. I will say that downtown Seattle is pretty tough compared to, say, Marion County. Marion County, their planning department's pretty good, and their inspection guys know their job and do the job well.
Good. good. We run into a few problems here and there, but it's great to have you say that and give. We like hearing good reports on how our processes work. I want to shift now a little bit. You both serve on the Marion County Economic Development Advisory Board, and you probably are both well aware that goes back to about 2003 when I realized that there was just a missing element in Marion County when economic development is so important, and just whether it's the building and the planning, land use, how can we be involved? And of course, Jim, way back when you were actually the president of SEDCOR, for the chair. What is it? Chair.
I think that was
Get
in
my titles.
97 or 98.
Right. Yes.
And I followed the mayor, Mayor Anna Peterson.
That's right. Yeah.
She was chair.
So a lot has gone on in the area with regard to economic development. So I thought there was a missing piece in Marion County government. So we got this going, and you both serve on that. Talk a little bit about your experiences, just some highlights, and what you think the viewers would like to know about the work you do on the Economic Development Advisory Board.
Well, first of all, what I'd like to say, sorry if I'm jumping in ahead of you, but
you've got the microphone, you can pass it on.
great quality of life starts with a great job. And so if a person realizes that great quality of life starts with a job, well, with a job, there has to be economic development and opportunity, or economic opportunity. And so I think it's outstanding that the Marion County Commissioners find value and importance in economic development and helping companies grow and expand and do what they need to do to be able to provide the jobs that people look for employment. Because at the end of the day, government doesn't create value, private business does. Government survives off the taxes that are paid by private business and by employment base and employment taxes. And so it's incredibly important to have a connection to economic development. And so that's what's so great that this county has chosen to develop a board, and the board's been very effective in tackling issues such as transportation.
Yeah.
People don't stop and think about how important transportation is to economic viability. We're blessed to have an interstate that goes right through our county, and being able to get products to consumers when they need to get products. And so the advisory board tackles all kinds of different issues, not just looking at grant opportunities to help businesses to expand and do what they need to do.
Good.
Well done. I'll echo the majority of that. I'll even say all of that. But I may add a few specific points. So from my perspective, the board, I think, does an incredible thing. It serves a purpose. There's a great team of people that get together. It's the best team of people I've seen assembled and that I've had the privilege of being on in the area. And we've tackled issues. We've
Sometimes controversial.
Oh, but you know what? Yes, controversy often leads to growth. So
that's right. Good.
I don't see it as a negative thing. If we all just were patting each other's back and saying good job, we wouldn't get much accomplished. But specifically with EDAB, I think that we aid an EDAB, Economic Development Advisory Board, for those watching who don't know what we call ourselves, the little fancy acronym. It aids those who speak with others about relocating, those who have those conversations with businesses that would like to come to the area. It aids those conversations to say, we have a city and a county who believes in development, and here's what we can show you. Here's the proof. Not only do we believe with the team that we put together to solve your issues, but we also believe with the pocketbook that we bring to the table. So I've been on the board now, I think, a little over 3 years. I think my first meeting was the last meeting that funding was supposed to be given, but maybe we pulled it back. And very excited that this year some of that financial contribution is back, because at some level, as long as there is something, and I think that the more is a bigger statement to larger companies and a bigger quiver our bigger arrow in someone's quiver, such as SEDCOR, to go attract businesses to the area that bring those jobs. But I think that it serves a great purpose. I feel privileged to be on the board with some great people, and can say that both bringing money to the table and the people in that room are two huge values. And now that the money is back, at some level, I think speaks volumes as to the county's interest in economic development.
And the money you're speaking of, again for the viewers, is the lottery. There are lottery dollars. Back in, was it 84, when Oregon voters approved a lottery, and the purpose was to go back into the community for economic development. The county gets some of that funding, comes to us for that purpose, and so we have given the Economic Development Advisory Board the challenge and responsibility and the privilege to review applications that are submitted by local businesses, and you make recommendations then to the Board of Commissioners and of where those dollars should be spent. So you've got the microphone. Talk just a little bit so the viewers understand. There's a criteria. A company says, oh, there's some dollars available, lottery dollars. I want to grow my company. Maybe talk a little bit about what some of those applications look like. What are businesses wanting to do with the money? And then when you were reviewing these applications, just some thoughts on that process.
That's a big topic to boil down.
I gave you lots of things to pick from to talk about.
But as far as the criteria, I think that our group helps decide that criteria on a regular basis to see what we think would be within, the best bang for the buck, within the county's best use of dollars spent per job created. And the sole goal for those tuning in, is to leverage those dollars that sit in this pot on the side to create jobs. And so probably the biggest indicator is job growth and job retention. And everything else thereafter is just our confidence that what they say will be job growth and job retention will actually happen, because we know that job growth and job retention goes directly to the tax base, which fuels and brings more money to the area.
Yes.
So as far as what those companies look like, they range from very well established, what Salem people might think of as big business, but I don't think of you as big business, but I know some people would, Jim. Multi-state in a few great plants that produce a great product, but in the end, we're not talking Nike here. We're still talking a $10, $20 million operation. And so they range up to that size to maybe the size of a NORPAC would be a notable local provider of a service to the farm industry and the ag industry that would be at the table, as well as we'll just say local brewery, Seven Brides, or Organic Fresh Fingers as an example of, I think Fresh and Local is their new branded name. Someone who started in a small spot in Kaiser, under 1,000 square feet, making healthy food for the school district, and now has grown not just the business, but that thought of what should food look like in our school districts, and how can we deliver it better and more fresh and in a healthier manner. And that's now a very good success story of someone who's come back for funds to again expand a great idea. And I think that an example of what that money might be spent on, she's looking for a flash freezer and space to house food right now, because if she could house food for a little bit longer period of time in a good manner, she can add more bodies. That helps her supply and demand, and she doesn't have to lay off as many part-time workers and keep more full-time on. So that's an example of what I see.
That's a great example, a very good example, and that I was especially pleased when I looked through them, and of course the Board of Commissioners did agree with your recommendations, and that they were all related somehow to ag, which is Marion County's biggest industry. So that was good news. Any other thoughts on the process, your experience with both the allocating these lottery grant dollars and the process?
I guess my thoughts in general is that it was a much more difficult process than I ever had anticipated. Because myself, I've been on the board now about 3 years. I came on the same time as AJ. And so we were not part of the process a number of years ago when we were doing this. And there was a lot of debate. And The
That's
interesting
good,
part,
right? That
of
was
course,
good.
that was good, but the vetting part was hard. And what was interesting is pretty much it was unanimous of the companies that we did choose to fund. We all kind of at the end came to agreement of this is what we should do and this is the plan we should undertake. And so the process worked, but it was just really difficult. I had no idea that it would be that difficult, but very interesting process. You got to see a lot of great business ideas. And I will also say this, that without Don Russo as our facilitator, I'm not sure how we would have gotten that.
Good.
But that's
Good.
just, it is a fact. He, wouldn't you agree?
Absolutely.
Invaluable
Yeah.
to the process. And so, yeah,
Good.
I guess that's what I would have
That's
to say.
great. That's great. So in wrapping up, we've had a great discussion. There's a whole lot more we could talk about, but we better wrap up. We can come back and do this another time. Just any final thoughts you have before we close? Whatever you'd like to touch
You've got
on.
the microphone. I'll let it.
Well, we appreciate the ability to come and, well, actually you came here, to be at my own office and provide some input on economic development, what drives economic development, what drives jobs. We appreciate the opportunity to have a voice. I think that's important for small business owners. So many small business owners don't feel that they have a voice. I think that it's important to talk about tax structure, as difficult and thorny of an issue as that is. People need to understand why, AJ brought up 66 and 67, why the flight of capital left this state. Wow, it was huge, and most people have no idea. But it's important to get that bigger picture, because Oregon does tend to lag in unemployment rates, and we don't lag in poverty level and in hunger, but there's reasons why. And you just have to dig a little deeper. And I think it's programs like Marion County Economic Development Advisory Board and these types of shows that if people tune in, maybe they get a little bit more insight as to why Oregon is the way that Oregon is. And it's a great state to live in. It's great to work, shop, play, and do things locally. But there's more that I think we could do.
Good. Great. Thank you.
And I'll be short and sweet, but I'll echo something. Thank you very much for this opportunity to be here and for putting a young guy like myself on the air. It's fun. But I'd like to echo one thing that Jim said earlier, that I see at its core level coaching JV girls soccer, and that is that self-esteem and self-confidence and just taking ownership, not of a company, but just of yourself and your life. That value starts with a job, with the ability to support yourself and then support a family. And I just would encourage any viewers that are listening today that as you think through any policy, political, or even personal issue in your life, that if you take the standpoint that I take when I coach my girls, it's what I do, that self-esteem starts with giving people control over their own lives, and that starts with a job. That's a pretty good lens, because I want to help people that are hungry. I want to help people that are in need. But until I can help myself, I can't help those people. And so I would encourage people to take ownership of themselves and to encourage policy decisions and county decisions that give people that ownership, which starts quite simply with a job. So thank you for having us.
Oh, well, thank you very much. This has been a fantastic discussion, and I appreciate your time. I know you are busy businessmen. And again, Jim Rasmussen, the owner, CEO of Modern Building Systems, and AJ Nash, who is with, you are an expansion officer. We want to make sure our viewers know that, with Fidelity National Title Company. So great discussion and great observations, and your service on the Economic Development Advisory Board is greatly appreciated. You can see the kind of individuals who step forward to do this work that is so important, and just great leaders. Thank you both for what you do for Marion County and your communities. So thank you for being here.